Are you a busy parent? Do you feel like you're being pulled in multiple directions all at once? Are you exhausted and overwhelmed? Meet my mom. Her name is Santi. She's a pediatrician, expert in mind-body medicine, and a life coach. She can help you break free from guilt and overwhelm so that you can enjoy the life that you've worked so hard to create. She can also teach you how to support your family in a more holistic way.
Hello, and welcome to another episode of the IMD podcast. My name is Santi, and I'd love to introduce two amazing guests, Amanda DeCesar and Amber Schiffert. Amanda is on a mission to promote healthy relationships with money through financial education, guidance, and actionable advice. She's passionate about helping clients use their money as a tool to achieve their dreams and break through financial roadblocks. After graduating from St. Michael's College in Colchester, Vermont with a BS in mathematics, she began her career in investment and wealth management at JP Morgan, serving high net worth families. In 2018, Amanda transitioned to an independent financial advisor and earned her Certified Financial Planner designation. With 20 years of knowledge and experience in the financial services industry, Amanda continues to pursue her passion for helping clients gain clarity, confidence, and control of their finances through founding Terra Wealth with Amber. She anchors her work on understanding her clients fully, from what their goals, values, and ambitions are to what worries them and keeps them up at night. Amber Schiffert is the co-founder for Terra Wealth. Amber has a passion for making a lasting impact on the lives of others. Because of this, in 2017, she changed careers and entered the financial services industry. Recognizing the outdated practices of the industry, she sought to redefine financial education and empowerment in a more meaningful and personalized way, which led her and Amanda to launch Terra Wealth in 2023. She is a San Diego native and an SDSU Aztec. While at SDSU, she studied communications and international political science and was an active student on the campus as a member of Alpha Phi. Amber is driven by a genuine desire to improve the financial health and well-being of her clients. Blending her expertise with a deep understanding of individual needs, she aims to empower her clients to take charge of their financial futures and embark on a path of long-term success. Welcome to the podcast, Amanda and Amber. We are so thrilled to have you here.
Thank you for having us. We're excited.
Very happy to be here.
All right, so I have to say, first and foremost, it is really awesome to see women who are in the financial sector. Tell me a little bit about what led you down this path.
Sure. I'll kick it off. I was always strong at math growing up as a young kid in school, and then carried that over into my education. And so I originally had gone to school for math and education. I received my undergrad degree in math, pursued secondary ed for a bit, but ultimately decided to give the financial industry a try upon graduation. So it being a male-dominated industry wasn't very new to me. Granted, a lot of my math classes and my field of study was very male populated or very male dominated, but I just decided to give financial planning or the financial industry a try and just really fell in love with the relationship aspect of personal financial planning and financial advisory work. It combines the numbers and analytics side of things, but allows me to also feed that education passion that I have and supporting individuals and families, business owners, whomever it is with their personal finances. So the first office I worked in actually in Boston was very much male dominated, in some ways a good old boys club. And I recognized pretty quickly that the different approaches women took to planning and saw it as a key strength and something the industry needed more of. So where Amber and I are excited to be women in this industry. We see more women coming in, but still not quickly enough. We hope to encourage younger women and get more in the industry for sure.
Amber, how about you?
My path wasn't as straightforward. financial planning found me versus me seeking it out. I was actually started my career in marketing and sales. And what led me to the financial services world is that I just wasn't finding like there was much fulfillment in my career. Like it was just a day in the day out. And I didn't really feel like I was making an impact on anyone or doing anything like meaningful. I was in sales, I was selling ingredients. There's only so far you can go there. So I actually had a friend that introduced me to a firm here in San Diego. I went to the office and interviewed there. And at first I was like, I'm not going to be able to do this. I know nothing about being a financial advisor. That's not my background. And then, like from my bio, where I said I saw something broken, I went in and I interviewed with these guys. And I just thought that these are the guys giving financial advice. They didn't seem like they really cared about the actual financial advice as much as maybe the money that they were making. I just thought I could do this better. I'm smarter than them. Not that they weren't smart, and I care more. So I just dove in and I changed careers. I started with this firm. And then as I got into it, I really still started to notice that even though I wanted to change things and do things differently, I couldn't because of the constraints of a larger corporation that I was under. So when Amanda and I met, we had a lot of the same aspirations for how we wanted to work with our clients. And then we also had the same like concerns with the industry and the conflicts of interest that are just inherently there when you're with a large firm make it more so like in any profession like that you're dealing with finances with a client, like whether you're a loan officer, a real estate agent, a financial advisor, an attorney, like there's going to be conflicts of interest that just naturally exist. But there's more so when you're under a corporate envelope. And those aren't necessarily like your own personal conflicts of interest that like you can mitigate through. So my path wasn't straightforward, but I feel like I'm exactly where I'm supposed to be. And I love what I do. And I love that we're women in an industry that is more male dominated. And I think that it gives us an advantage because we're different and we bring a sense of, we allow, I think, people to be more vulnerable and open in the conversations that they have with us with their money.
I love it. How did you two come up with the name Terra Wealth?
I was just like throwing, because I have the marketing background. So I was like throwing things out there, looking on Google, like what words had similar meanings to what we valued. And then I just thought, okay, it's funny. I go to this place to get Botox, right? And it's called Perfect, but it's like physical, aesthetic, something. And then it just worked out nicely. So I got the idea from that. And I was like, okay, like, what are our values? Transparency, like that, I think was the biggest thing for us. I wanted to be fully transparent, authenticity, be who we are and come from an authentic perspective, real advice. And then it just came up with Tara. So that's what Tara is for. So we don't have anybody like in our family or our life that is named Tara or any like role model that's named Tara.
No.
I love that acronym. It's on point.
We also, I think, tying into the point of being women in a male dominated industry, it felt very feminine, but authentic too, right? It depicted who we are and who we want to be for our clients, but it did have that feminine edge to it, which we both really liked. And I think that, and we've seen it's really pulled in women who traditionally either wouldn't seek out an advisor or in the past haven't because they haven't known where to start or where to look. And whether it's through referrals from clients or friends or extended networks, I feel like it's made being women makes us a little bit more approachable, especially from other women. Just knowing that women are more empathetic and as Amber said, our clients really feel like they can be vulnerable with us. And that's so important because there's so many aspects of your mental health and your overall wellness and around just feeling less stressed about things. Like money brings a lot of stress and a lot of angst and anxiety and just naturally. I guess having our name and our logo kind of be a bit of a
Welcoming.
who we are.
Yeah. And also, what was important was making sure that the name, like, we didn't want our last names in it. We didn't want it to sound like a firm, like a typical financial advisory firm. We wanted it to be like warm and welcoming and inviting. And then, the ultimate goal would be to build a team and be able to pass our firm on to other women. And we can't do that with our last names in the title. So it's just a brand that can sustain and evolve. So at some point when we retire, we'll have built a firm with women that we know and trust and that are going to continue with our same philosophy and be able to just pass that name down to them would be the ultimate goal.
That is really amazing to me that you have had this sort of insight from the very beginning of how you wanted your company to look, how you wanted it to feel to your clientele and to yourselves, and how you want that legacy to look decades from now into the future. That's great. You really put a lot of thought into this. And I think that's a beautiful thing because this is going to be that company that people can start their financial journey in and continue that even after you decide to retire. So awesome. So I know, from what you were saying, it sounds like you have a lot of female clientele. What are some of the biggest challenges women face when it comes to money matters? And what's your advice on how they can overcome that?
I think we face a lot more challenges just like inherently being a woman and to what solution there is. I think that the solutions encompass just being proactive and planning. But as women, we live different lives. Like we have different bodies than men. To start, women, there's a disparity between what men and women make. That's a financial challenge, and that's been around. Even if that gap has closed, women today make 82 cents on the dollar to what men make. And for women of color, that's even less. There's a lot of things that contribute to that. Maybe it's women, maybe it's just discrimination, right? Or maybe it's the roles that women have, or maybe it's women not asking for more money or asking for a promotion. But that's, I think, one of the biggest challenges that women have. And then also when it comes to finances, women, if you want to start a family, you have to consider, are you going to continue working? Or are you going to take time off from work? So that can be career interruptions. Women tend to be caregivers for their aging parents. So like when you're in your childbearing age or later, you could be having a family of your own and also taking care of your parents. So I think that's another challenge for women. And then just from like actual health standpoint, and you probably know a lot about this, is that we have a lot more parts. So there's a lot more that can break. So women are more likely to go out on a long-term disability, which means we may not choose that we don't want to be able to work. So that can interrupt our income. And then women tend to live longer than men. So we have to plan for a longer life expectancy than our male counterpart. And because we live longer, there's a higher chance that we'll need care when we're aging. So there's a cost associated with that. So just inherently, we have a wall ahead of us, like in terms of our finances. And I think when it comes to the income disparity, being more assertive, going for positions that maybe you wouldn't think that you could get, asking for that raise, but that comes with a certain level of confidence that you have to have in yourself and knowing your worth. So teaching women that it's okay to ask for those things. And then when it comes to all those other challenges, financial challenges, it's having a plan in place. So if those things do happen, you have the foresight and the planning to plan for them.
So you mean that finding a sugar daddy is not the solution to our problem?
But you should still have your own finances in place, right? If you're getting an allowance, have a bank account that he doesn't know about so that if you need to get out of there, you can.
Yeah. That's actually one piece of advice that my mom gave me as I ventured into the land of relationships and marriage, that you have to be safe and you have to be able to have an exit strategy. God forbid you need to have an exit strategy. So, Amanda, what are your thoughts? What are
Yeah.
some obstacles that we face?
Well, one comment just on what you were just saying is even if, you're in an ideal relationship, at the end of the day, you may not see eye to eye on the best way to spend money. Your values may be big picture, may be aligned, but day to day, you may have different hobbies or activities that you value. And so still having a little independence and autonomy over your subset of finances can be really helpful for some relationships. But I think generally, like thinking more big picture when it comes to financial challenges, I agree with obviously everything Amber said, but the overarching thing I think is society too, and what they've instilled in us. Like it was only 50 years ago, a little over 50 years ago now, that women could finally take out a loan or hold a credit card in their name alone and not need a male co-signer, which is huge when you think about like just the societal impact of what type of roles society puts on us as men as women. And while things are changing, or I believe things are changing ever so late, the traditional roles that we were brought up with and portrayed on us is like men were the go-getters, the risk takers, the income earners, the household providers, whereas the women were more of the household homemakers. And it was, if you are looking to go into the workforce, go into a safe career, go into something that you can stay in your whole career and continue to work up in, but don't take those chances. Don't start those businesses or those companies like the advice our male counterparts would get. And so I think that's played just such a large role and ties to how women are a little bit less assertive and maybe won't go for the same job that a man will. I think there's a statistic that says a male will apply and interview for a job if he sees that he holds like 40% of the qualifications, whereas women have to or want to see that they have 100% before they think that they are even nearly qualified. And like switching that whole mindset and just empowering women to say, no, you are enough, you are valued, and what you can bring to the table is important, and taking those chances, maybe like it's not a bad thing. So I think that trying to ignore, I guess, all of the historical societal boxes that were put in, and just hoping, saying, I don't want to say women should, but feeling more empowered to go out on a limb, take that risk, and just take that chance, because what's the worst that can happen? But I think also learning about money matters, where it's not in our curriculum growing up, or it's something that we do have to seek out. And I think that our male counterparts, again, naturally have conversations, whether it's with their fathers or bosses or just role models. It's more of a natural part of their conversations, whereas it just doesn't come up as much with women. And so we're trying to shift that as well and encourage women to be more open and willing to ask questions or seek out information.
So, why do you think that is? Why is it that men get to talk about money more freely and women, it's like almost a little shunned at times, depending on the environment that you're in? I do think that's changing now, but why is it that it's taboo for women to talk about money? Have you noticed this sort of nuanced, have you had that sort of observation?
I actually haven't had that observation. I think it's just because of the way we've set up our firm that actually a lot of the couples that we work with, the women are the ones that we're introduced to, and the women are the ones that are in control of the money. So within my social and my family circle, our problems are like with money that if we do have, right, from growing up, it hasn't been that it can't be talked about or that the women don't talk about it and the men do. It's more of the underlying relationships with money that you just grow up with and learn from your parents. But Amanda might have a different perspective on that, but I can see that. I just haven't personally experienced where women feel afraid to talk about money. Maybe more so, I don't know who to ask about money, but not like I'm afraid to talk about money, but from just like women in my social circle, I don't know if I have enough to work with a financial advisor, or like, how do I even find a financial advisor? But it's not so much like that they don't want it, they just don't know how to access it, is what I've seen from my experience.
Yeah, and I agree. In more recent years, that's been my experience as well. And whether it's just the natural connections with that women make, I think women are connectors by nature. We like to connect anyone that we think would be friends or get along, never mind a professional resource for somebody. So I've definitely seen that more and more. I would say that, say back in the day, it feels like a long time ago now, but when I started my career and was in the financial district in Boston, and it was very male dominated. Just the general structure of things. Most of the women in the office were support staff and assistants. There was, I think, one female advisor in an office of 60 to 80 advisors. It was stark how male dominated it was. And so you just like, but a lot of it too is generational, I think, where older men just were brought up in that more traditional sense where they talk about it, but they talk about it in their circles of men, whether that's, again, this is going to sound like so old school, but whether it's like at the country club or on the golf course or at the bar after work, which just by nature right there, I've been in many women's groups in the financial industry at this point because we do seek each other out and come together. But one of the things we always talk about when just trying to do women's events with other colleagues is like, what can we do that also integrates with our lives? Because the reality is men can easily say, I have an after work meeting, or I've got to run here for cocktails or do this or that. Whereas women are still typically the ones expected to be the default parent. If you are a parent, I got to get home. I've got to pick our kids up from school, daycare, wherever. I got to get dinner on the table. I, again, think that's shifting dramatically. And that is very much, I'm talking like a high level stereotype of where things have come from. But those types of environments, I think in the past had just led to a space where men felt comfortable or felt open to talk about it, whether it's, oh, it's bonus season, or, oh, I made so much on such and such stock. They may not get into the nuts and crannies of like their personal finances, but they're still talking about money in general and like what money can be used for, how it can be used, or how you can make money. Where women, I think, traditionally have just kept it closer to them and don't feel like it's something to have in just general conversation. They don't want to make anyone feel uncomfortable if perhaps they're in a different money situation. And so I think it's, at least in my experience, and I'm thinking personally too, just with circles of women, where when money comes in, sometimes it's, oh, we don't want to go too far down that road, because the last thing you want is somebody to, again, feel uncomfortable because they feel like they're in a different socioeconomic bracket or something like that. So I think we're just much more aware of one another and surroundings and how something may come across to someone else. But the reality is, like, you really don't know. A lot of people, you could have perceptions of people because of the clothes they wear or the house they live in or the cars they drive. But the reality is, like, when you look under the hood, it's like they're completely over leveraged and not in a very solid financial position. Whereas you might feel like you're more frugal and maybe you're behind your next door neighbor, or it's like keeping up with the Joneses. You're in a different place, but at the end of the day, you're actually in a much better financial situation because of certain habits and things that you've put in place. I don't know if there's any one thing, I guess, to bring it back to why men will talk about it when women don't, but it's, yeah, I think it's a lot of things combined, and it's just an interesting thing for me to continue thinking about and talking about. Often I'm that person in conversations who likes to bring things up because I want, in a way where it's comfortable and where people are willing to share what they're willing to share, not specifics, but more around the relationship, the feelings, the whether it's good feelings or bad feelings, excitement over a bonus or anxiety over kids going to school and tuition costs, whatever it might be. I think with women, it tends to be more around the feelings and emotions
Mm.
around it versus the objective dollar amounts or what money means. Does
Right.
that make sense?
Yeah, absolutely. So I that brings me to my next question, Amanda, which is how should we look at money? What would be a healthy mindset to have around money?
I always say it's so easy to have money be a defining factor or characteristic, like how much you make or how much you have in the bank. And I think that is so far from the truth. Like money is not part of who you are and shouldn't be. What it is, in my eyes, is really a tool to help us live the life we want, right? We're here on earth to serve a purpose, to live a life that we envision. And money is really just the tool that would allow us or can allow us to do that. It's a currency, right? It's a currency that has a value that we can trade for something else that we value. And for some people, that might be something more materialistic, like brand new cars every few years. For other people, it might be something more experiential, like travel, or it could be family support. It's very personal for each and every person and family, right? But I look at it like use it as a tool. Yes, it's a finite tool in the sense that you have so many dollars coming in every year, but then you look at those dollars and you say, what do I want these dollars to do for me? And how do I allocate each dollar so that it has its own job? Just if you're looking at a big company, you don't want every single employee to be doing the same thing. You don't want all your dollars to be doing the same things. So what dollars and how much do I put towards future life savings, retirement, or maybe a future down payment or a future trip, some sort of future goal? Some money you keep in kind of your short-term reserve bucket for things that you know are coming up or emergencies, and then others you can spend money. Again, it's meant to be spent, whether it's today or down the road. And so thinking of it that way, and then also where that kind of leads into like budgeting and cash flow. Everyone thinks of budgeting as being this kind of has a negative tone to it where it feels very restrictive or constraining. But I always try to reframe that too, where instead of it being like, instead of thinking of budget, think of it being your spending and savings plan and having it be mindful and intentional so that again each of those dollars has a place to go that serves a greater purpose for you and your life goals. Saying no to one thing, a lot of people say, oh no, I can't afford that because you're trying to save for a down payment on a house, say. So things come along, it's no, I can't do that, I can't afford it. So reframe that and say, no, I'm choosing to say no to this because I'm saying yes to buying a house, or I'm saying yes to that trip to Europe, or whatever it is. I'm saying yes to getting out of student loan debt. So you have the ability to choose where you're directing that rather than feeling like it's being put upon you. That makes sense.
Yeah, it sounds like having a budget can actually allow for some freedom in that if you budget appropriately, right, you have this much money for food and you know that you need this much money because you've taken notes on how much money you spent in previous months. You need this much money for your monthly car expenses. And you know that because of what you've seen in the past months, and this much money for this bill, that bill, school tuition, etc., right? Then we know, okay, if I make X amount of money and I'm putting it into all of these little buckets, then that means I might actually have a little bit of money left over to use for what I want to use it for. Or so I can't help but think that if we're wise about how we quote unquote budget, right, that the dividends actually would end up being higher simply because you're able to apply new meaning to your money and the ways in which we can use it as a tool to bring ourselves forward.
Yes. Yeah, completely. I think It's almost like attributing, it seems silly, but because money has value, but like putting personal value on what you're putting it towards. Whether it could be artwork that you love and that you like to decorate your house with, because then when you come home and you're sitting at home, like that makes you feel good and it's your place to relax and just unwind. For other people, that may not matter to them. And so it may be, again, a trip, tuition, a house, or it could be just the feeling of security of having extra money buffer in the bank for anything that might come, whether it's something personal, something in the family, a health issue, economic uncertainty, anything and everything. So it's, and it's finding the right balance for you about how much you need to feed one goal versus another. And that's, I think, where financial planning and advisors can come in and help, because it is hard to see the bigger picture. You're zoomed in so far on the day to day and just feeling, okay, maybe it's everything that's coming in is going out. But what does it really look like over the long term? Like, it's everything that's coming in going out, but you're making contributions to your retirement account and your kids' 529 plans or your emergency savings fund or your midterm like travel fund. Like, you already have kind of the savings built in. So it may feel like everything's going out, but you've already set up the framework for future success. So then when you zoom out and you look at the bigger picture, you're like, oh no, what I'm doing is actually keeping me on track to meet the goal I have set for myself, whether it's retire early or be able to leave the corporate world and start your own business, whatever that might be. It's hard to see that bigger picture by yourself. And luckily we have a lot of technology and things that can help with it, but I still think somebody that having another set of eyes and an objective partner to help you look at that kind of thing is very helpful as well. And I think brings a lot of clarity at times.
Absolutely. So, how do you think mothers can best create a financial plan that balances their needs with their children's future? Sometimes I feel like that can be a struggle. Like, what do I do today for today? And what do I do today for the future?
Yeah. I think that is like the ongoing question, right? And I think it's similar to anyone who has conflicting priorities. Like, it could be, I want to pay off all my student debt, but I want to save for retirement. Where do I find the balance? So I think for mothers, like Amber said earlier, it's really important to note that especially women do get sandwiched between generations at times, or at least more often than men, where you might be a caretaker for an older relative while you're also trying to raise your family. So not only are you trying to save for your children, you're trying to care for this older generation, but then you're trying to also keep your future and your overall financial goals in check. And if you have to step away, that makes it even more difficult. But I always tell when we're looking at just your financial future versus your children, it's a silly analogy, but I always say, just if you're on an airplane, they say put your oxygen mask on first before helping others. Similarly with finances, ensure that your future is funded first, meaning your retirement, any potential long-term care needs, because by not doing that, what you end up doing is just having that same problem repeat itself, where if you end up needing care later in life and you don't have the financial means to pay for that or support that, you're going to then be relying on your children. So you could set them up perfectly, pay for their entire college career, and maybe give them a generous gift to launch after college, start their career, or buy a house, or whatever that looks like for you. But if by doing that, you're putting your own future at risk financially and creating a possibility where you're going to then have to rely on them later, you're just perpetuating that challenge that we've been talking about, where women are constantly in. So the reality is, retirement, there's no plan B. You can't go to the bank and say, hey, I'd like to retire next year. Can you give me a loan for X amount of dollars? No bank is going to loan you money for retirement. So you really have plan A to lean on, right? Your own savings. We know pensions are going away. And so it's really requiring us to think about our own futures and save for that. Whereas whether it's college, a home, or any type of activities and things that your children may need or want, those are typically things that you can leverage for them, like college. You can apply for student aid, you can take out loans, and that's okay. Obviously, finding again the right balance for each individual is important, but it's okay to do that. So I always say try to put yourself first, just like you would when it comes to self-care, right? It's if somebody else is not going to make time for you, or if you're not going to make time for yourself, why will somebody else? You need to prioritize yourself first and foremost, and it makes you a better person for those in your life, whether it's your partner, your children, your friends, your colleagues. I think it's the same thing when it comes to finances.
I think that's a really good point. I didn't think about the fact that we're not able to take out loans for our retirement. Obviously, that makes sense. So, to really strategize how we want to manage our money in the present so that we have what we need down the road, even if that means you have to deal with the pain of getting a student loan or a mortgage or paying for a car month by month. That's great.
And even if down the road you don't need long-term care and you don't have those potential expenses, then money may be left to leave to your children at that point as a legacy. And that's going to do a lot more for them than the gifting money early on if it ends up putting you in a financial predicament.
That's great. So, Amber, I have a question for you. What is your advice for women who are trying to learn how to be financially savvy and they're just dipping their toes into the water?
I think Amanda touched on this, but I think the first thing is understanding your cash flow and looking at your money like it's something that you earn and you want to give every dollar that you earn a job, and having clarity around that. I think that's like the biggest, like that's the first step you should know is what's coming in and what's going out. And then if there is anything left over at the end of the day, figuring out what goals you want that money to go towards. And just from a financial planning standpoint, if you're somebody that, you know, is just starting out, you want some good tips on what you should be looking at, building your own financial plan, because not everybody is in a position where they can hire a financial advisor. And we're fully aware of that. So there are people out there that are going to be doing this on their own and they don't know where to start because there's so many different financial things and they tell you this and that. But I think like it comes down to a lot of people, and it's simple as it sounds, like a lot of people don't really know what their take home pay is or don't know the exact percentage that they're putting into their 401k or what their employer matches or what they're spending on. They typically know what they're spending on their fixed expenses, but when it comes to their variable expenses, they don't have as much of a sense or a gauge. So going back to what you guys were talking about earlier is that getting a sense like what have I spent in this category over the last 6 months is a good gauge. And understanding too, like at the end of the day, if all of the money that's coming in is just going out the door to expenses, maybe you do need to cut back on expenses in certain places. So gauging from there where I'm comfortable cutting back, like where I can cut back and continue to live like a comfortable lifestyle. We don't want people like having to eat top ramen every night for dinner because they want to cut back on their groceries. And then I think a lot of I don't think it's like a sexy topic, but if you are a woman and whether you're have a partner, you're married or you're single, protecting your income is very important. So as I mentioned at the beginning, women are more likely to have a long-term disability. So without your income, how does your daily life go about? Like a lot of people will get some sort of group benefit through their employer for a portion of your income replacement in case you became ill, had cancer, disabled, right? Had a long-term disability, but making sure that you have enough of your income protected. I think those are like I know those aren't very sexy and fun tips, but I think if you can get your budget together, you have your income protected, and then start to think about what you're putting towards your retirement would be starting up a solid foundation. And then whether you have children or you're single, as part of the protection planning is having documents in place. So like some sort of like very basic estate plan, having a will in place, a power of attorney, a healthcare directive, because those are all very important. I think that's the foundational, like without like just trying to keep it really simple of 4 check boxes like that you can start with, because financial planning and like what you can do can get very, very complicated and complex. And that's when you spend the money to hire a financial planner. But when you're doing it on your own, you just want to keep it simple. You don't want to overthink it too much and just start with the basics, start with the foundation, and then grow from there. That makes sense.
Yeah,
Yeah.
I think that's great advice. Because we all start somewhere, right? For many of us, it's when we get out of high school or college and we get our first job and we're like, woohoo, we got our first paycheck. And then we blow it all. And then you realize, I don't have enough money to get something from Taco Bell at this point. So, mom and dad, can you help me?
Yeah.
And our parents generally tend to be generous enough to give us a little extra money because maybe we're still living at home, right? But that means too that we have this additional net underneath us. And so it protects us from having to look in a more critical way at what it means to make money, what it means to spend money, and what it means to save money. So I really like the way both of you created this map of how to proceed with what we have and what we want to have for the future. Thank you for that.
Yeah, I think whomever you are, building that foundation, it is the same. Whether you're a mother, you're a father, you're single, you're in a relationship, I think for anybody, just building that foundation is the most important thing. And so it's not so specific to the role that you feel like you are primarily in. That makes sense.
Right.
I
Absolutely.
think a lot of, if you Google what should I be doing for financial planning, I feel like more so you're going to get save for retirement, right? But like the thing that no one talks about is what if you can't earn income because you're sick or injured? I know and again, I know it's not sexy, right? But people don't think about that. If you're saving for your retirement when you're 20 years old and you're putting into your 401k, if you become disabled and can't work, like you don't have any money coming in the door. So like when you're young and your working years, like if you don't have enough money saved to retire, you should have as much of your income protected as you can to offset that risk so that you don't have to pull out of those accounts early. If you're going to have a disability when you're 30, and I think like we start to see it more like in our mid 30s as we get older, we see people like get sick, they get cancer, or like there's chronic illness is everywhere, right? And it doesn't discriminate on how young or how old you are. And if you are unfortunate, like if in a position where you're one of those people that gets cancer in their 30s and you can't work, like what are you going to do then? What are you going to fall back on? And I'm a very big proponent, if like you're just starting, the one thing you can do to make sure that you're going to be okay is have disability insurance in place, even before you start saving for your retirement, right? Because if you can't work, you have to go into your retirement. Now you have to take early withdrawals and you have to pay a 10% penalty. And what good has it done you?
That's really great practical advice. I remember when I was just graduating from residency, someone came to me to talk about disability insurance, and I was just suspicious of everything. I was very suspicious. I'm like, it's probably a scam. I'm probably never going to get any money out of this if I actually do become disabled. I better not get sick. But here I am, and I work in the healthcare field, so I see it all the time. Like, I see vulnerability, I see sickness, and I see unexpected things happen. So there's no denying the need for a safety net. And for those folks that are young, right, we only have our parents for a certain amount of time. And then they're like, okay, time to create your life. It's such an important thing. Yeah, I didn't know how important disability insurance was up until I got older. So That's great.
You hope you never need to file a claim. Just like car insurance or homeowners insurance. It's funny because it's like what we call property and casualty coverages, where it's on more of a materialistic thing, whether it's your house, your car. People insure their iPhones every time they buy one. It's like how many people get the Apple Care, get the insurance on their iPhone when they buy $1,000 iPhone. But you're 30, you have 30 plus years of income, earning years ahead of you. That's millions of dollars. And just making sure that you're protected in that aspect it's very, like how you said, just practical advice. Like it's just everyone should have it no matter what. The insurance industry can be icky and not, it's very easy to not
Yeah.
be trustworthy of it. But all the more reason to like do your homework, do your due diligence, understand what it is, why it's important before just going out and getting the first option available to you.
And I don't think it's like the funnest thing to talk about when you're like, what should we do from
Yeah.
start? But it's not talked about and people need it. And it can be very financially devastating. And it's smart. It's a smart thing to do. And it just makes sure that you have all your bases covered.
Thank
Yeah.
you for that. So we can't talk about disability insurance without at least touching upon life insurance. I would love to hear your thoughts on life insurance as well.
I think life insurance is just as important, and it depends on what your personal goals are when it comes to life insurance. Again, the insurance industry is sleazy. So I think if that you have goals to meet that include having life insurance as part of them, and you're not working with a fiduciary advisor, figure out what amount of insurance you need. You can just look at it like, if I was gone today, who do I want to support financially and what do I want to leave them? That can be money to pay off your mortgage. If you have a spouse, we always say that like it's smart to have a 1 year readjustment period. That's total household income. So if you're married and your combined household income's 250,000, you may want at least 250,000 of insurance so that your spouse can figure out their life without you. So that's one thing to consider. Do you want to pay off the mortgage if you've passed? How much is that? Do you want to leave anything for your kids? Do you want to be able to fund their future college education, or to leave them money so that when they're 30, grown up, hopefully financially responsible, they can put a down payment on their house? So thinking about how you want to financially support your loved ones when you pass, figuring out what that number is and how long you think you'll need that number for, and then finding an insurance agent or a company, like maybe you've done some research online for good insurance companies, and going to them and saying you specifically want this amount rather than them telling you what you need, unless you're working with a comprehensive financial planner that's actually calculating that number out for you and they're just giving you unbiased advice on what you need. And yeah, it's an important piece of the puzzle of your plan, but I would still say disability is the first and then life insurance is the second, because you're more likely to have a disability than a premature death. I think only 2% of term insurance policies pay out.
Wow.
You usually outlive the term, but you want the term insurance to be a waste of money. But we never know what's going to happen to us. Like, we have a client, she's in her early 30s and she's a recent widow, completely unexpected. So if that happens to you and your family, like, how do you want to be able to financially support them? And you don't know how, if you're single and you have kids, how much money you want to leave them and who their guardians are going to be. And they're going to definitely have a readjustment period, but like their readjustment period isn't going to affect the family finances. Where like a spouse, like they might not be able to go back to work. So you want to be able to like have enough that they can take the time to go through their process and what feels best to them.
I think it brought to light a question that I believe our viewers or listeners might have, which is, What's the difference between term life insurance and whole life insurance?
That's a wonderful question. And you've probably been like, someone's probably talked to you about it at some point in time because you're a doctor, just like the disability insurance. They're like,
Probably
hey,
comes in the mail like 50 times a year.
yeah. So term insurance is just pure insurance. It's just like your car insurance. If you don't use it, you lose it. Whole life insurance is going to have a cash value component. So there's a living component and there's also the death benefit, and it will last your entire life. So it won't expire at the end of a term. So as opposed to the pure insurance that is just a death benefit, if you don't die, you don't get the benefit. The whole life insurance is you get a benefit while you're living, that's the cash value. And then you get a benefit when you die, that's the death benefit, but you can't outlive the death benefit in a pure whole life policy.
You can't outlive the death benefit. Meaning, like, at some point or another, you're going to die, so you're going to get the benefit.
Correct.
Mhm. After 105.
Yeah,
Got
20.
Yeah, it doesn't expire.
It does not expire. Yeah.
Okay.
But because of that, innately, whole life insurance, which is a type of permanent insurance, is much more expensive than term insurance. So it all has to align with what your goals are, what you're trying to protect, and then also what your cash flow is, and how much you can put towards it. Because to Amber's point, whole life insurance has that life benefit with the cash value component. So it could be used as a savings vehicle in a sense, but it has to fit with the other parts of your financial picture and goals. If you're looking for the pure protection because you have young children and you want to make sure that, God forbid, you get in a car accident and don't come home tomorrow, that your children are protected or have the resources they need to make it through the rest of their childhood, that's term insurance. That's the pure protection insurance that you want. And there's various terms that you can look at.
And the same for the whole life products. There's all sorts of whole life products, universal, variable. But when it comes down to it, if you are looking at a whole life product, we would gear more towards the traditional whole life insurance because of the security that it has. And you're putting all of the risk on the insurance company. Whereas some of the other products out there, you're assuming some of the risk because of the way the product's built. And that could be like a whole nother episode. Workings of insurance. And I think if you don't understand a product, if someone's selling it to you and like, again, they're not a fiduciary advisor where they're commission based, where they're just selling it to you as pure insurance, like if you can't understand it and you don't see how it fits into your plan, you shouldn't do it.
Thank you for that. Yeah, it seems like in both, when it comes to both disability as well as life insurance, it's like an onion. You can keep peeling back those layers of the onion skin to understand more and more what they offer, which would best meet one's needs. Excellent. So you brought up another term that I think would be worthwhile to talk about, which is that of a fiduciary. This kind of centers too on that suspicion that I had when I was really young. Ooh, who's this guy selling me disability insurance? Should I trust him? I don't know. But yeah, can you touch on that? What does that mean? And what should clients look for, or potential clients look for in a financial advisor or financial planner?
So a fiduciary, by definition, is somebody that has to operate under a fiduciary standard, which means that they have to put their client or your best interest first. And so, Amber, I think you had mentioned earlier how a lot working with a big corporation, there's a lot of natural just conflicts of interest, right? And so a lot of times, and just talking about insurance agents, there's a natural conflict of interest because typically the insurance company that they are contracted with have certain expectations or contractual minimums. And your point, Santi, about peeling back the layers of the onion, and there's so much more that a certain product can do for you. It's like, where does an advisor stop because that's what's most appropriate for their client versus continuing to add additional riders or additional features because it enhances the product, increases their commission, right? So a fiduciary advisor is somebody that, again, must take your best interests into consideration, put that first and foremost. And so many times when you look at the industry, one way to define different advisors is whether they're fee-based or commission-based. And typically, fiduciary advisors are fee-based, where, like Amber and I, we offer our services based on a fee, where we are giving you unbiased fiduciary advice. And so we're understanding your whole picture, what your goals are, what your situation looks like, what your worries are. So on the risk side, and helping you put the right strategies into place to help you meet those goals. So it's not product or strategy driven so much as it's working as your partner and kind of the expert in the financial industry and the various financial strategies as to what pieces of the puzzle we can put together to help you achieve what your goals are, and not at the expense of or for any type of commission or gratification on our end. I think that first and foremost, when you are seeking out a financial advisor or financial planner, ensuring that they are fiduciary planners is kind of the first box to check. And then I would say understanding what their fee structure looks like. Do they charge an annual flat fee where it's advice based only and it's not tied to implementation of any strategy or product or contract or anything to that extent? Beyond that, understanding various credentials and experience and what their scope of services are. So are you engaging in a comprehensive financial planning relationship, or are you engaging in an investment advisory relationship only? And understanding what those mean, how they're structured, again, from a fee standpoint, but what you can expect from the full scope of that particular engagement.
And I think also to understanding to the best of your ability, their business structure. Are they with a broker dealer? Are they with a wirehouse, or are they with a corporate RIA, or are they an independent RIA like us? You could Google them and say, what are the differences between these? Or you can ask ChatGPT, and then getting a good sense of, okay, what seems to be the best fit for me? And then we know that not everybody can afford financial planning, right? So not everybody's going to be able to work with a fiduciary advisor. So going back to those do-it-yourself things, like knowing what you need before you reach out to somebody. Because for some people, they are going to need to work with a commission advisor. So it's good to know beforehand going in. I've done my research. I know how much I need in life insurance. I know that I only need term insurance, and I only need it for 20 years, right? I don't need whole life insurance. And I know that I need disability insurance, and I know that these are the features that I want on this disability policy. And for those of you that are able to work with a fiduciary financial advisor, we want to consider those things, but just be mindful. Like, we know that not everybody's in that same category, or like people that are starting out, maybe they can't go to a financial advisor at first. So not that the commission insurance people are bad, right? Because some people need them, right? But being informed before you go in and speak to them, and not being sold by them. Just tell them what you want.
That's great advice. Yeah, I went in blind when I got my disability insurance. And it ended up working out because when I got older, I realized actually I made a pretty good decision with this particular disability insurance and this package. But I certainly felt very uncomfortable in the moment when I decided to move through with it.
Usually with a disability insurance, you want to work with someone that will show you different carriers so that you get to compare the benefits and the nuances of the contract. So you could go to a brokerage firm versus going directly to a specific insurance company, because then they're going to only recommend that insurance. So you can look up like an insurance broker near you, because they're going to have all the disability products available to them that they have a selling contract with those larger insurance companies. And they'll be more unbiased than going, unless you have a specific carrier that you know that you want to get insurance from. If you're, I don't know which one is the best. And like for you being a physician, you want to have own occupation. You want to have enhanced partial disability. You want it to go until age 65, right? And you want inflation protection on it. But anything on top of that, I don't know how yours is structured, but a lot of people will say, put a student loan rider on it, put a retirement rider on it. And that's going back to what Amanda said. It's, do I actually need those things, or is that something they're telling me about to enhance their commissions? So again, just doing a little bit more research online, figuring out what you need before you go in and talk to someone.
Great. So, as we wrap up, are there any last pieces of advice you would like to give to listeners?
Just that if you're not feeling confident with money or not feeling empowered, like just start by educating yourself and doing those small tasks to make yourself feel better. If understanding your budget will make you feel better, then start there, right? If getting your disability insurance will make you feel better, then start there. But just knowing that there are avenues for you to go down, whether it's hiring a fiduciary financial advisor like us, or maybe starting with, and I'm not too familiar with them, an L-Vest, where they're specifically for women. I think they have a subscription and you can talk to a coach there. Or just doing some Googling, like just have some bullet points of things I need to know about and just research them on your own. You don't have to spend hours on it, but just getting like a general sense so you have some sort of understanding to feel empowered to take the next steps. Everybody's at a different point today. People might be ready to hire a financial advisor. Some people might be ready just to get those foundational pieces in place.
And I don't try to empower, especially women, to have a conversation. If you have a circle of friends or family, people that you trust, strive to have that conversation, whether you are talking about just goals that you have or things that you're working to achieve. You think of it this way: if you were to start a new relationship or develop a new goal to start working out and lose a certain amount of weight or anything kind of like that, something that we naturally want to talk about, right? You start dating someone and you're really excited about it. Are you going to keep it a secret? Probably not. Or you're going to the gym, that's something that's now a new part of your daily routine, and it may take away from time that you have with your spouse or immediate family or friends. And so those are all things you talk about. And those, in situations like that, people are typically very encouraging and say, good for you, go to the gym, we'll catch you next week, or just supportive in whatever it is you're trying to achieve and work towards. And so if it's something where it's like, hey, I'm trying to learn more, understand, or be more mindful with my spending and or more intentional with it. So I'm going to skip the Saturday morning brunch and go for a walk instead. I'll catch you next week or something like that. I just encourage people to be open with that. It seems like too often when it is somehow money driven or money related, or it ties back to money, we worry that it's going to be seen in a different kind of way, like in a way where you can't keep up or you don't have the resources. When reality, it could be because you're choosing not to use your resources that way. And that's okay. So it falls back on the whole relationship with money and being a little bit more vulnerable or open around it. But then I also, beyond that, I second what Amber says. Do your homework, look at how to just do basic budgeting, cash flow, understanding that. If you were like any business, needs to know their profit and loss and their balance sheet because they generally have to report that. You, as an individual, you could look at it that way too. What does my monthly profit and loss look like? What does a monthly balance sheet look like? And again, have the starting point being a place of like mindfulness and intentionality and understanding. Try to keep any of the, especially the personal judgment, out of it, because you're doing it so you can learn from it and from yourself, not to make yourself feel bad.
I think too, like being okay with where you are. Like don't look at where your friends are or where your social circle is.
Yeah.
Looking at just sitting down and looking at where you are and what you want to do and being okay with that and saying, this is where I am. This is what I can do right now. And knowing that from there, you're going to grow. We're constantly growing, right? And just don't be hard on yourself if you're not where, your friends from college are, or you're not where your other social circle is. Like you have your own journey and do what's right for you at that time to put yourself in a better position and just get started. That's the hardest part. Start and do something for yourself today.
I know, easier said than done not to compare yourself, but I will say I read a book once where it's don't compare yourself to anything external. Like, only compare yourself to yourself. So if you want to compare yourself to where you were a year ago or a month ago, do that and then look at where you've come and build upon that. Or look at where you want to be in a month and see where you're at today and say, okay, what do I need to do to work towards there? But try, again, easier said than done, but try not to compare and rate yourself against anyone external from you.
I think that says so much about our personal values too. I remember one of my early jobs before I went to medical school was that I used to work at the Limited. And so as our dress code, we had to wear Limited brand clothing, basically wearing them as advertisements. I am not shaped the way that everybody else is shaped, and it didn't look flattering on me. And I was like, at the risk of embarrassing myself, but also because I needed to save the money for college and med school, I was like, I'm not going to wear your brand clothing. The response I got was, then you have to wear unbranded clothing. So I went and took all my jeans and I took a stitch ripper and I ripped off the brands so that they would have nothing to complain about. And really what I began to realize was it's not so much the brand for me, right? I'm still not into things that have a brand to them. That's not something that holds value to me. But if I have an experience with my family or go on a trip, or really for me, it's experiential, like the trips, being able to save up for my kids for their future, like these are things that hold tremendous value to me. And maybe I'm a doctor, but I don't need a BMW. I want a legacy, which just speaks so much more to where I want my intentions to lie. Yeah.
Yeah.
I want to take a moment to thank both of you for your time and for your energy and all this great advice. Where can our listeners find you?
They can find us on our website, which is www.tarawelth.com. If they want to have a complimentary introductory meeting, I can't talk today, they can fill out a scheduler on our website. And they can also find us on LinkedIn. We have a company page there, but I would say our website's the best way to reach us. And that has our contact information, and they can schedule from there if they'd like to meet with us and tell us about where they are today and what their goals are.
Great. I will put the website and social media handles into our show notes for today. Thank you both again. I really enjoyed this conversation.
We did too. It was good to see you.
Yeah, thank you for having us. It was wonderful.
Thank you for being here. I hope you all have a great day.
Hey, if you like what you're hearing, give this podcast a 5-star rating and share it with your friends and family. If you want to learn more about my mom and what she does, visit her at IamWellMD.com and subscribe to her email list. If you leave her a comment, you might just get a shout out in her next podcast episode. If you'd like coaching or support, she has programs available for you and your whole family. My mom is a great pediatrician and a great person, and I hope you like her podcast episodes. Have a great day. Goodbye.